from Nordea, and I definitely share all their viewpoints, and we will also see some repetition here. Like Liv said, I'm from Sbanken. There's my slides also. Maybe I'll get my slides on my computer as well. How do we view blockchain? I think Lasse said it quite right with describing peer-to-peer payments, describing crowdfunding, describing crowd lending, is that the big elephant in the room when it comes to all this is that the traditional banking business model is to some extent unsustainable. And we are facing a perfect storm of changes that will transform the banking industry, where blockchain is one of many developments challenging the status quo of the banking industry. 2020, 2 weeks ago, the deputy CEO of Nordea said it really well. When it comes to the regulatory side, the regulation it has created huge barriers of entry into the banking industry by regulating the capital requirements, the solvency, the reporting needs for the banks. Now the regulations are shifting from regulating the capital to regulating our operations. Game. We have new technology creating a lot of new possibilities. You also have artificial intelligence, which Alexander mentioned earlier today, and also the Internet of Things. Think about micropayments, machine-to-machine payments. Gartner predicts that there will be 50 billion devices connected to the internet by 2020. And MasterCard says each of those can be a potential payment device. But machine-to-machine payments, it's not possible with today's schemes. So blockchain is crucial to achieve the vision. But this is changing customer behavior and it's increasing competition. This is why we're now looking into blockchain as an enabler to renew ourselves rather than scary new technology us out of business. And back going back to the start, it all started with the Bitcoin blockchain. This slide here, one of my analysts made for me 2 years ago. At this point, nobody talked about blockchain. You talked about technology behind Bitcoin, and you can at an early stage look how the Bitcoin as a payment service provider could enable faster payments and microtransactions, and it was all due to the Bitcoin protocol, which has been known in later years as the blockchain. But a lot of the things that we saw in the early days are being already proven to be not wrong, but not as correct as you thought. When you see the speed of transactions, you're now seeing that as the Bitcoin blockchain is being utilized, the scalability of the blockchain is suffering from its own success. And of course, like Burak said, when you mention the word Bitcoin, this is what everybody sees. You think about Mt. Gox, you think about Silk Road, you think about ransomware, where you are asked to pay $35 in Bitcoin worth of ransom to get your files back. So Bitcoin is to many people related to money laundering, cybercrime, and this has created some instance. I think this is why from a semantic point of view, you talk about blockchain. Blockchain resonates for bankers. Bitcoin does not. And even The Economist, blockchain made the front page of The Economist late 2015, really kicking off that this will become a huge hype. Everybody is going to want to see what is this blockchain. And what we saw, shortly after that, everybody started talking about blockchain. Everybody was asking, what is this blockchain? How do I use it? Jon and I, we were interviewed by NRK on the radio this morning, and they asked me, well, how do you want to explain blockchain to a child? So I have no idea. To be honest, I'm having trouble explaining blockchain to an adult, because this can be compared to the early days of the internet. Blockchain is for me the same as TCP/IP is for the internet, and nobody talks about TCP/IP, but everybody uses the internet. And if you ask somebody back in 1992, all these internet things, what are you going to use that for? Well, I remember calling up some BBS and downloading some pictures and whatever, but I don't think anybody could have predicted Facebook, Google, and so forth in the early days of the TCP/IP protocol and the early days of the internet. So we are barely just at the start of it. But going from buzzwords, the banks have really taken interest in this technology and moving now from curiosity to concrete actions. Really diving into it, we have talked about the R3 consortium both in the panel. Lasse mentioned it, and we will have representatives talking more in depth about it later on today. But you see a lot of other initiatives. Citibank is looking at creating a Citicoin, their own private blockchain. Nasdaq has launched their blockchain trials. Australian banks utilize Ripple for cross-border payments. I will get back to that. And you have UBS having their blockchain lab out of London. Basically, it's Alex Waitling getting to do whatever he wants. So he got a good deal there. But this stretches far beyond the R3 consortium. And if you look at a lot of the European and also the American banks, they've been experimenting for this for quite some time. So the attention regarding blockchain really hit the Nordics at a late stage when you compare us to the big banks of the world. Of course, if you look at these names and if you listen to what Lasse said about blockchain wanting to outcompete banks, the stakes are a lot higher for these banks than it is for the Norwegian banks. These are giants. We are nothing compared to these banks when it comes to size. So this is the state of blockchain today with the bank involvement. Basically looking at a wide array of use cases. And from Accenture early this morning, we looked at some of the use cases. There will be some repetition here and hopefully some new perspectives, but there are several areas of interest from a bank perspective. And when it comes to foreign exchange and remittance, it's an obvious use case. That's been considered the low-hanging fruit ever since we only had the Bitcoin blockchain. Trade finance, of course, microtransactions is also a perfect match. A lot cheaper transactions, microtransactions, especially in the media industry, it's impossible today with traditional payment schemes. So blockchain could really enable media companies to get paid for their content, and also moving to the complex parts, which was explained brilliantly today. Capital markets, that's a billion-dollar opportunity. I used to work in the clearinghouse here in Oslo for Oslo Stock Exchange, so I know how difficult that is. That's even more difficult to explain than blockchain. So blockchain is more simple than traditional clearing. And then you also have the RegTech, which is the new segment within fintech, and you're having a lot of RegTech companies in blockchain compliance companies. We had the questions after the panel discussion earlier today regarding privacy on the blockchain. I've also been asked about traceability, anti-money laundering, KYC, taxations. So there's a lot of questions regarding the use of blockchain in a way that also involves both governments, banks, central banks, and whatever, not as intermediaries that slow down the process, but as players that need to have some kind of information to have the transparency that is necessary for the blockchain, also for the government side. So this is a trend coming up. It's at an early stage, but it will be more visible in the time to come. And of course, you have already a lot of specialized blockchain companies targeting the peer-to-peer loan market. And I would like to dive into a couple of these areas just to see how this can affect banking from a use case perspective, not necessarily deep down in the technology stack. But starting at the starting point for cross-border payments, Lasse, he was mentioning how inefficient this is today. This is a $600 billion market yearly, and that's excluding the Hawala networks. Do anybody know what the Hawala networks are? These are money transfer networks based on Islamic law, where you have clerics distributing money, a lot of money from Norway. The World Bank have no idea how big that amount is, but the cost of transferring money through MoneyGram and Western Union is so high that you have different ways of transferring money, and probably some money that people do not want to know about being transferred also. But this is huge market, and it's slow and it's costly. You're having fees up to 8% for this. You can look at how Australian banks, they have utilized the Ripple blockchain for cross-border transaction in combination with the new standard for global payments, and doing now pilots towards the Philippines and other Southeast Asian countries where they have a lot of foreign workers sending money home, as was mentioned, I think Lasse said 5 seconds time. And this could eliminate costly third-party processes, sweeping, clearing, and whatever. We're doing cash management ourselves. It's extremely complex. You need not just one third party, you need a lot of third parties to make sure that money arrives at the right place. And when it comes to Hawala side, when it comes to the underbanked segments of the world, which are a lot of people, 2 billion people are excluded from banking in the world. That's a huge amount of people that need financial inclusion. And if you look at the Bitcoin blockchain, you can say a lot about Bitcoin, but you should not directly dismiss Bitcoin. Having a blockchain or Bitcoin wallet that does not require a bank account creates some kind of financial inclusion for a lot of these people around the world. And you cannot talk about blockchain from a banking perspective without going into smart contracts. Smart contracts is an application layer on top of the blockchain. Ethereum is the most prominent blockchain utilizing smart contracts. As was mentioned earlier on, this enables verification of predefined conditions. This can effectively reduce the amount of employers in the banking and finance and the whole industry doing manual tasks. Especially valuable when it comes to syndicated loans. A $4 trillion market still runs on faxes, emails, and Excel spreadsheets. We look at escrow contracts where you need multiple signatures. You're having papers sent through faxes, people are signing. It takes forever to do this. And also, if you look at the underbanked again, if you look at the financial inclusion, on the consumer side, there's not many people in Norway which are underbanked. But on the business side of it, you have a huge amount of the companies in Norway are SMEs. As much as 80 to 90% of companies in Norway are SMEs, and they're having difficulties obtaining loans and credit from the banking industry, because the way we issue credit to companies are suited for the big corporations, not for the SMEs. So smart contracts can make trade finance available to SMEs. I think the smallest company that we have in our client portfolio that really need some kind of trade finance products, they're having 10 million Norwegian kroners in yearly revenues, but they're having customers all over the world. Their market base is across the world, but traditional finance products does not apply to these kind of customers. Those products, they are suited to the big listed companies. Also looking into Norway, especially when you're having the governmental requirements for e-commerce, not e-commerce in terms of buying and selling stuff on eBay, but when it comes to procurement from the public sector, procuring services and goods from the private sector, blockchain could easily be utilized in that context, in making a transparent value chain from order to cash in the public and private collaboration space. And this brings me, I totally agree with Burak. I argued this at both at Money 2020 2 weeks ago, but also at the European FinTech Awards last week. I strongly believe that the banking industry has a lot to gain about utilizing blockchain, but the public sector, that is the real game changer for blockchain. But then you have some decision processes, and I really do not want to talk too much about that because I'm scared to be dragged into some public sector discussion. Also, we see that in the trade finance space, collateral tracking, it's an extremely labor-intensive process that could be automated through smart contracts to blockchain-enabled Internet of Things applications. Looking at the banks working with shipping, a vast majority of the employees in, for instance, Pareto Bank, their job is basically making sure that everything that they have as collateral is in its right place. That ship is in that port, that cargo is in that storage, and so forth. The combination of Internet of Things and blockchain can enable an automatic collateral tracking. Just look at farming customers being able to track every cow they have because their collateral is livestock. Reporting on how much livestock you have to the bank, it requires a lot of time from both the banking client, but also banking being exposed to the farming industry. This is a huge efficiency gain, especially in the US. And then you have, of course, my favorite when it comes to practical blockchain application, which is Everledger. Has anybody heard about Everledger? They use the blockchain to create a shared ledger for diamonds. Diamonds are controlled by the cartels. Every diamond has a laser engraved serial number on it. But also every diamond has a unique thumbprint when it comes to how the diamond is. This can be put on a blockchain. Leanne Kemp of Everledger, she saw this early. She's a fascinating woman. She's a rock star of fintech. And she has put the digital fingerprint of the diamond on the blockchain to her first use case was for insurance companies, because then you can see that when the diamond was reported stolen, either it was stolen for real or it was insurance fraud. You can track when that diamond entered back into circulation because it's stored on the blockchain. Both ensuring that insurance company, they have the legal ownership of that diamond, but also reducing fraud. And what she also sees that one of the big opportunities by this is the whole counterfeiting market, making sure that products is what they are. And this is one of the real benefits of the blockchain. It's the word that is no Norwegian translation. It's called provenance. The proof, not the proof of work, but the proof that something is what it is, and the tracking of ownership. Burak was mentioning some use cases there, having a complete track record of where we have lived, but for a product, having a complete record of who have owned that product, for properties, for fine jewelry. The applications are endless, and as Leanne says, diamonds is just a starting point. And also you have the capital market process. You can simplify this significantly. I'm not going to go into this one because Burak did it a lot better than I can do, but with a lot of slides. But you have a couple of different ways of viewing blockchain, and we touched upon this in the panel discussion. You have the mining-based blockchains. They will have some volatility in the network. The value of Ethereum has increased significantly. You can now trade it on Kraken. And also the processing power required to mine increase in correlation to the price. So there's a scalability issue with the mining-based proof of work. On the other hand, you have the non-mining consensus, alternative consensus mechanisms, where you have the incentive question, which is being challenged by some. I don't have a definite answer. These are more just raising questions to the audience when you have a whole day of blockchain. I'm hoping somebody can answer me that. And the panel did a great job, so I know a lot more now than I did when I made my slide deck. But as I said, the blockchain platform has a wide array of use cases beyond financial services. And you have both in music distribution, you have in voting, having liquid democracy through blockchain. It's a huge opportunity. You can change how you basically do the whole voting process. and also in the public sector. I think we're having representatives from the music industry here later. I had the pleasure of on the panel together with Imogen Heap last fall, November, December-ish. She released her latest single on the blockchain, to ensure that the artist got the rightful share of the money earned through the sales and distribution of music. And this is also one of the early hypothesis of how we can utilize the blockchain when it comes to distribution of digital assets, the provenance, and making sure that everybody gets what they need. I see I'm running out of time here, finishing up now quickly. And I raised a lot of questions here, and you have a lot of different ways of viewing the blockchain. I firmly believe that a decentralized stack is the solution. Lasse said it, you will have a lot of blockchains, a lot of side chains, and a lot of these blockchain platforms, blockchains, databases have a wide array of use cases. Big Chain is looking to solve the scalability. IPFS is looking to solve that you can't really store that much on the blockchain. You need some kind of file system for huge contracts. Ethereum is great for smart contracts. You have Iris, R3, Chain, Rubix, a lot of good platforms that can solve different problems. And then you have more specialized use cases. You have digital asset holdings for capital markets. You have Music, Everledger, and IBM is utilizing blockchain for Internet of Things, where I think they're speaking right now. And the end game here is, like Chris Skinner is going to talk about later, is the value web. A blockchain facilitating the trade of all forms of assets, currencies, stocks, goods, gold, whatever. So not only will this affect the world of finance, but I firmly believe this will affect the way the world works in a digital sense. But we're standing here talking about this like it's going to happen tomorrow. This will take a long time. I think we will see practical applications within the finance industry in 1 to 2 years, and mainstream adoption, we are talking 5 to 10 years. And my advice to people who really want to look into blockchain, especially for bankers, is to get your hands dirty, test it out, play with it, because you can read as much as you want on CoinDesk, on different blockchain, Bitcoin blogs and whatever, but you really can grasp the concept before you try it out yourself. So that's blockchain from a banking perspective. Thank you.